It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Yes, it is. Certainly the ex-investor stock is lowering slightly. We are seeing a lot of new investors coming back to the market. On the lower North Shore, we're finding a lot of sort of mum and dads are looking to buy investments for their son and daughter. There's certainly a strong buyer group.
And that is Chris in Sydney, and we'll be getting back to that conversation in just a moment as we welcome you back to the Real Estate Breakfast. Every morning, of course, you can stream us, listen to us anytime, anywhere. And you might be listening in the gym right now. And from Canberra to the Sunshine Coast, 7 days a week, we are talking to all of these real estate commentators, the experts, and it just sort of helps you break down the real estate market that much more easier. And it's the middle of our working week into a Wednesday morning, March the 5th today. And here is something that I found pretty interesting, and you might be in this situation. And it is a trend that has emerged with buyers who purchased during the early pandemic years, particularly in 2021 and 2022. They are selling at higher rates than other buyer groups. PropTrack says, in practical terms, more homeowners from this period are listing their properties after just a few years of home ownership. Well, obviously probably directly related to the high interest rates. Now, for instance, compared to historical trends, roughly 3% more buyers from 2021 to 2022 have put their homes on the market. And what does that do to the marketplace? Well, that has a bit of a shift, a notable impact with an estimated 40,000 additional properties listed. That is well above expectations based on past selling patterns. So yeah, it's just one of those anomalies post-COVID, of course, that we have been catching up with. Right now, let's catch up with Chris Davies from Belle Property, and he is in Crow's Nest. And good morning to you, Chris. Welcome to the Real Estate Breakfast this morning. Is that something you've kind of noticed in terms of some of these buyers listing around that 21-22 purchase?
Yeah, hi Craig, good morning. Yes, absolutely. We've had a number of sales in the last year or two where they have bought in 2021, 2022. Where we're quite close to the city, we found buyers wanting to move into this area, and they've, since COVID, sort of changed of plan and then had more lifestyle moves, so decided to move out of the area.
Now, Crow's Nest, you might have heard us talking about these units, which I want to get to in just a moment. But if you look at last year in your market, the market was a little bit sluggish, but you've picked up a little bit of momentum for 2025. Tell us how it's all going there in Crow's Nest.
Yeah, we certainly found towards the end of last year, the market got a little bit slower with buyer behaviours a little bit less motivated. And this year we've got off to a great start. We've had a couple of open inspections where we've had 60 or 70 buyers through the first open. So there's a lot of buyer interest out there at the moment in our area.
So tell us a little bit about what's going on with the units, because that really was a bit of a talking point the other day.
When we looked at it, we had some great sales last year for apartments, and I'd had a couple of clients that we'd sold for that had bought in 2021 that we sold for significantly higher. What we noticed is with the high interest rates, we were getting a lot of sort of ex-investor stock onto the market. And if we looked at some stats across neighbouring suburbs, in Crow's Nest, properties priced between 700 and 900 were about 50% of the market share, what was sold. And if we looked at other suburbs like Wollongong and St Leonard's, 60 or 70% of that market was all over 1.1 to 2 million. So we saw actually just a lot of lower priced apartments selling last year than higher priced apartments.
And what has happened in terms of the first interest rate drop, like the conversations that you're having with people, not only buying the houses, but in particular the units? How much of a difference has that first rate cut made with the people that you're talking to?
So the first Saturday after the rate cuts, we actually had higher numbers than apartments that we'd listed the weekend before at their first opens. So initially, we certainly saw higher buyer groups through.
And what is the median house and unit price while we've got you there?
So for a house in Crow's Nest, the median price is 2.85, and for an apartment, it's 920.
And there's been a bit of media coverage, especially with building defects and strata management issues. Is that something that's kind of showing up at your end where people might be just getting a little bit nervous on some of these newer units that are coming onto the market?
Yes, there's a few buildings in Crow's Nest that have had certain cladding issues that are needing to have remedial works and also higher strata fees. Buyers are certainly being more cautious. We're providing all the information we can by providing them strata reports and things just to help them. There's definitely a cautiousness amongst the larger buildings and developments with high strata fees.
You mentioned the investors. Some investors, of course, right around the country have sold out. You've been seeing some of those last year. Is that starting to ease somewhat?
Yes, it is. Certainly the ex-investor stock is lowering slightly. We are seeing a lot of new investors coming back to the market. On the lower North Shore, we're finding a lot of sort of mum and dads are looking to buy investments for their son and daughter. There's certainly a strong buyer group at the moment.
So Crow's Nest, it's a nice little part of Sydney. What are you sort of hoping to see for this calendar year in 2025?
Well, I think we're going to see some more growth. Now that the metro is in and it's tangible, people are loving it. They're loving the convenience, how fast it is, how quick it is and clean. On top of that, we've got so many more bars and cafes and restaurants. So we're certainly looking for more growth. And certainly as the infrastructure changes, we would expect that to continue.
All right then, Chris, good on you. And thanks for giving us a little bit of a breakdown on what is happening there in Crow's Nest, which seems to have had quite a bit of mention from us over the last week or so, but it is nice to get that all sort of cleaned up. Have yourself a fantastic 2025, and let's hope that the market there continues on its merry way.
Excellent. Thank you, Craig.
Each week, we bring you in-depth real estate discussions, including inspiring stories from homeowners, knowledgeable real estate professionals and economists. Whether you're a buyer, seller, or just a real estate enthusiast, we are your ultimate property podcast.
Now, if you're moving into the United States to live, perhaps a job is taking you there or love, something about the real estate market that is very unique to America is when you get a mortgage, you can fix the rate for the entirety of the loan. And so when the mortgage rate was lower, people were fixing their mortgage rates at a 2% rate. Now, where this gets a little bit tricky is people wanting to sell and refinance perhaps into a bigger home and find themselves jumping up to a 7% current mortgage rate. A lot of these people end up not moving because of that. However, they can do this negotiation of a buy down. And I'm going to get Crystal in Florida, who is joining us to explain that. But first, Crystal, welcome to the Real Estate Breakfast this morning. So when it comes to property buying, this moving between the rates, it's a big consideration.
Yes, I would say that's the most commonly asked question and concerns amongst the buyers and the sellers. Because when the sellers sell, they have to purchase a home as well. So they have to consider interest rates too. Thankfully here, we are very creative, very resourceful, and have great relationships with some lenders. And there's some excellent programs out there and options for example, rate buy down. And then there's some Florida bond programs that help fuel home ownership as well, that can help offset some of the higher interest rates. So that's definitely a concern. We've had to get a little creative. But if you think about it historically, back in the 1980s, interest rates were 14%, 12 to 14%. So historically, we're not significantly high, but it's just not what we were used to during the pandemic era. So we just have to get to this is the new norm. They are predicted to go down slightly, not drastically, at the end of the day, you're still paying towards your home versus throwing away your money in rent. So I think this is a challenge that we are working through and homeowners are beginning to accept and realize the importance of the homeownership versus let's just focus on the interest rate. That can be changed and you can refinance. And again, there's some very creative ways to get around that. And also your negotiating power, you are correct. Some of the price reductions were due to that. So you can make a better deal on the front end, because you have to pay a little higher in interest rates.
And for the Australian audience, just explain a little bit about the buy down, because in Australia, we don't have mortgages like in the US where you can fix the rate for 30 years. People will probably find this quite interesting in terms of what the buy down means and how that transaction works.
Sure. So a mortgage rate buy down is essentially where you pay extra money up front to lower the interest rate on your home loan. So that would be in addition to your typical closing costs. And what you can actually do is you can try to negotiate with the seller to help toward concessions and contributions to help pay that rate down. So essentially what that can do is lower your monthly payments. So if you take the lower monthly payment over a course of a 15-year mortgage or a 30-year mortgage, you can imagine that is a significant savings. So rather than negotiating with the seller, for example, money off the purchase price, say $15,000 or $20,000, you might save more money negotiating a rate buy down. Because again, if you accumulate the savings of your monthly mortgage over 15 or 30 years, that's a significant savings for you as a buyer.
All right, so thank you for that, Crystal, for explaining all of that. So there is something definitely for you to consider if you are heading off to the United States to live.
Listen to in-depth discussions with industry leaders on investing options, understanding different suburbs with insider perspectives and exclusive tips.
If you're a first-time buyer in Canberra trying to get into the market, it is tough, as we're talking about this morning. Cash buyers who have decided to cash out, they are mortgage-free, a lot of them. They're pocketing a reasonable amount of cash, but unfortunately for first-time buyers, they are being knocked out, crushed by these cash buyers in your market.
Yeah, we're still seeing about 25% of all property purchases in Canberra being without a mortgage. So time and time again, I see an auction scenario where there's a few young couples who have fallen in love with a home and they've got their budget set and they're ready on the day, and then they just come and get blown out of the water by downsizers who have just sold their house for $2 million. They've got cash in the bank and ultimately they don't really care what they pay for that house. Once they set their eyes on it, they'll pay whatever they need to get it. So that creates a really tough scenario as well.
There are some lenders where you don't need a 20% deposit. You can borrow up to 95% in some cases. You will require lender's mortgage insurance, which is a cost. But if you've got strong serviceability, if you've got strong income streams, sometimes that strategy can make sense.
We connect you to the best real estate information across Australia. The Real Estate Podcast.